Hi, guys. Welcome back to the show. I'm John Logan, filling in for Tom O'Brien today. He's up at a Traders Expo in New York along with Tommy. And I do a morning show every day from 8 to 9 called the Global Market Pulse. You're always welcome to drop by. But hopefully we can get some good information out this hour. And then, again, please feel free to come by in the morning, 8 to 9 every day. So we look at the XLU. This is something I want to get right into. This is the utilities sector. This is the utilities ETF, if you will. And if we look at this, we talked kind of religiously last hour about some unfair lows and unfair highs and, you know, what they actually mean, what might be a good definition for those particular inflection points. Now, you know, we were in this 45.14 area. I think we reached it at 45.19, almost to the tick. We talked about being patient and waiting until the market comes to you on these inflection points. This is something I wanted to kind of bring out. There's a couple of things in play here with the utilities. Now, my general thoughts right now on the treasuries, the notes and bonds. I mean, we've had a good run in the S&Ps. We kind of lurched forward again. We've stayed in a balanced area, kind of gone sideways on those 10-year notes. And remember, the utilities are kind of this balancing act between, you know, okay, the thirst for yield. There's not a lot of yield there in the treasuries. Therefore, these dividend type situations in the XLU, coupled with the technicals now going on. I understand we're getting back into an unfair high here, but we've kind of tested it, kind of crowding it again. If the notes go north, you know, the UX stock market has already kind of put the stake in the ground on the notes, in my opinion, that at best we're going to go sideways for a while, no matter what the market does on the north side. And if the market pulls back, the broad market pulls back, we could get a little bit of a spike in treasuries, which would mean lower yields. And then therefore you've got this thirst for yield going on in the utilities. So I'm looking at, believe it or not, I'm not wanting to sell this inflection point up here around 46.83, except to take profits on these longs started at 45.14 on this particular ETF. But looking at the breakout on this particular ETF for this to move actually higher, I think you've got some really good odds in play here, all things considered, looking at things on a relative scale for the XLU to head north. And if you go into our scanner, you can see all sectors green here ranked on the daily when it comes to breadth. And when you drill into the XLU right there, you know, you see pretty much a sea of green, not a lot of reds here. So, you know, the way, in my opinion, you could actually even increase the odds on the XLU is just to find instruments that are sitting in a good spot when it comes to four profiles across the board, not necessarily green across the board, but, you know, where are the ones? Let's take a look at Nextera. Let's just pull this up. What does that top mean? That means that we're sitting already on the breakout point for this profile to head higher. Now, here's the weekly. We're looking at this before. It's a long-term, really decent play, NEE. Now I'm not looking at selling this inflection point, looking for it to actually head higher, all things considered what we just said. And, that's kind of one that's playing around with that unfair high on the daily. Looking at gas, we looked at this the other day. We talked about looking at buying this around these 6408 areas. And again, we're kind of sitting at the top of a profile and already edging up and have tested a couple of these long-term profiles. So that's the way I'm looking at that sector. I think we could actually head higher. Going into our S&Ps and talking about breadth for a little while, we talked about on Friday's close, we had a decent number of the stocks in the S&P 500 putting in new balanced areas on the bottom side, or new demand areas. And we talked about those kind of folding over into middle ground when it comes to, opening this week. So we've gotten into positive territory on the weekly, on the long-term breadth. We've been in positive territory for a while on our intermediate breadth. And some of these coincided with kind of getting into those unfair lows on the index itself. And what do I mean by that? Let me pull this up. See if I can find our S&Ps here. God, we spend a lot of money on data feed. I'm just looking at all these instruments and thinking, oh my God, they're all real time and they all cost money. Here we go. See, that's what somehow goes through my mind when I see all those instruments. Anyway, we started, kind of crossing above borders here, getting back in the balanced area, and some of our breaths started turning positive at this state, and we had something to lean on here. Now, we didn't slow down at all at these unfair highs. I actually took some weight off here around this 1898 area. But then, we've had the action we've already talked about here to kind of close above, go back and retest. But right now, you've got a weekly breath change already that started happening. I know it's Monday, but if we have a Friday close and that breath stays positive, that's a pretty good market turning indicator. And I'll show you this. When you look at this relative to, I'm just going to pick one out, the Shanghai, go back and man, has this thing started moving north again or what? Here's the Shanghai. So, and again, we've got a lot of weekly profiles that are trying to appear already down below on this. But if you look at the long-term weekly breath on the Shanghai and just look at the crossovers, and I'm showing this on the screen right now, you'll see that on a long-term basis, it's a really good market barometer of, whether stocks are trading above or below profiles in an aggregate manner to give an output there and, what the long-term view should be. We haven't crossed into positive territory again, but again, this has been a really good barometer of whether to be long or short this on a long-term basis. If we drill down into other time frames, it gives you a little bit more timing tool situation, and you've got some overextension situations that have happened that you can look at also. But again, just something to look at. It's interesting how the coal cap and the Bovespa, after doing that report on crude oil relative to those two indices, are now in the top slot when it comes to ranking on breadths on our 17 global indices. That's actually a good marketing thought there, Mike. Let's see here. Let's go back to some of these instruments that we were going to take a look at for some folks in the den that have pointed them out earlier. I want to look at MNKD. And again, this was a social, oh my God, it's $1. All right, so here we go. So let's go back in time here. I think we started looking at this when it was in this state back in summer 2014. Now, you'll get some information off StockTwits and some of the other venues that are kind of alerting you to some crazy things going on when it comes to social media. But a lot of times these stocks will kind of do their dance and then ultimately slide back into no man's land. We're going to talk about this a little further when we come back from break, guys, so hang around.